GoLogin is the best browser for multi-accounting. GoLogin is a platform that enables users to manage multiple browser profiles.
Yes.
Because always remember, accumulation comes in a bearish counter trend and distribution comes in a bullish counter trend. I hope you know Wyckoff.
No,
No.
not clearly,
Okay,
but
okay.
I know about it.
Yeah.
Yeah, but
So
not
about
clearly.
Wyckoff, now people would think the schematics. Have you seen the schematics? They'll do all
Yes,
of
I have
this
seen the
Fibonacci
schematics.
supply, buying
Yes.
climax and all. No, no, no. That's not what's important about Wyckoff. Okay. What's important about Wyckoff is his laws, the three laws of Wyckoff. The first law being the law of supply
Supply and
and
demand.
demand.
Yeah.
Yeah. The second one, the cause and effect. The third
Yeah.
one, is the effort and result. Okay. So
Yeah.
what he saw about the market is that he thought supply and demand is what runs the market. But no, now we know that supply and demand is not what runs the market. It's an algorithm. Okay, there's an algorithm. That algorithm is what runs the market. But yeah, supply and demand works too. That's all right. Okay. And then the second one is cause and effect. The cause being liquidity, and then the effect being the manipulation. Okay.
Yes. Yeah.
Yeah. And then the effort and result. So to see effort and result, you need to use the volume indicator. Okay, because that's the only way you can see the law of cause and the law of effort and result. Because the effort means you can view the effort through the size of the volume
Volume.
bar. Yeah,
Mhm.
and then the result is the candlestick. Because the candlesticks only tell you 50% of the story. Okay, the rest, the next 50% will be shown by the volume bars.
So
All
do you
right.
use them?
No, I don't use it because I don't have to. Because if you know inducement, that's it. You don't need to know anything else.
Okay.
Okay.
Yeah.
Then now I'll tell you. Let's get back into this. So now people would see this as a downtrend, right? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So now people would wait
Yes.
for this. They'll wait for this. So
Yes.
now this will become an inducement, right? Now this
Yes.
is an inducement. And then, like I told you, on a lower time frame, people would see this as a downtrend. And then I told you, above every swing high, there will be
There's
buy stops. There will be buy
yes.
stops, right? Now you see
Yes.
how this liquidity has been fed into this POI. Now liquidity has been fed into this order block. That is what
Yes.
makes it strong.
Yes.
Okay, that is what makes it strong. Okay, now we
Yes.
know that I told you, after a major high or low has been taken out, there needs to be a pullback, right? Now
Yes.
this was a major high because even the smart money traders got trapped here because they looked at this as an order block because I think even gave a reaction. No, it did not. Okay. Now you see price came
Yeah.
back into this POI. Price came back into this POI, and now we know because now these highs have been taken out. If price
Yes.
keeps going higher, the people who placed buy stops here would be in profit. I told
Yes.
that to you. Okay.
Yes.
Now we know that price needs to pull back. And then
Yes.
we need to focus on all of these tiny, tiny little details. Okay. We
Yes.
have this break of structure on the 1 hour. Okay.
Yes.
But on the 4 hour, this was our range from this high to this low.
Yes.
This was our range. So now, are we interested in selling? No, because why? We are in a discounted price. Always remember that. Okay,
Yes.
always remember that. And now, once a break of structure happens, I told you, once a break of structure happens, okay, a new
Yes.
trading range will be created. Now, what is our new trading range on the 1 hour? Okay, so that's why we need to be a dynamic trader.
Yeah.
Okay, we need
From
to switch time frames. Okay,
yeah.
now this is our new range from this low
Yes.
to this high. And then I told you, once a new range has been created, there will be a trap within every range, which means that is the
Yes.
internal range liquidity.
Yeah.
Now,
This.
you see that clear order block right here?
Yes.
How many people would have looked at that?
Yeah.
Okay,
A lot.
so now,
Even me.
yeah, even you. Now,
Yeah.
now, based on the information I gave you right now,
Yeah.
would you look at this as an order block? No, right?
No,
Because you know
definitely
this
not.
low
Yeah.
will be taken out for sure.
Yeah. I
Because
will
now,
look at this week or something.
yeah, now I told you, always choose the order block
Yeah. Which is
that's
closest.
closest to the inducement. Now, this is
Yes.
the inducement. This is the
Yes.
inducement. And then, what is the closest month? The
Yeah. This
50%
week.
of this week. You see that?
Yes. Yeah.
Okay. And then, price came back down, took out all of the liquidity from this. And now, do they have
Yes.
any reason to go back down lower?
No.
No, right?
Yeah.
If they do that, the people who place the sell stop below this would be in profit.
Yeah. And
Okay.
they will move
So
their
now,
stop losses to be.
yeah, to break
Yeah.
even and stuff. So they came back down, created a new range, and then where can we expect the next pullback from? So now this is ping pong. Okay, now this is ping pong. So you could have done this, you could have bought from here, but you need to know the higher time frame perspective. Okay,
Yes.
we know that we're gonna expect pullback from here. So what we do is we buy from here. I did that. I bought from here, and then I know where my next pullback zone is.
Yeah.
I know that
You
once
post
this
you
high,
posted a case study about this, right?
yeah, I posted case study. So now I even bought from here. I think. Okay, and then now we have this inducement. So I told you, after a major high or low has been taken out, there needs to be a pullback. And I even told you the reasons why. Okay.
Yes.
Now, once this high has been taken out, where will price go into? Where is the closest order block to the inducement? This, right? Only this, because you see, this was pure price action, nothing. Inefficient price action. Okay. Price went back up and then came back down because they are seeking liquidity and then they'll destroy it. Okay. Now, where's the liquidity?
Yes.
Right here. They'll take that out. And now, where's the next amount of liquidity? Below this low, they came back down into it. Okay.
Yes.
And
Yes.
now, where is the next pullback zone? Now we know that price has to go back higher into a premium price on a 4-hour time frame.
Yes.
Okay. Okay.
Yes.
And then until we go into a 4-hour a premium array, okay, price needs to
Yes.
go in a bullish market structure, right? In a
Yes.
bullish market. So now, so in a bullish market structure, so price will do this and then it will come back down, right?
Yes.
So now, where will this higher high form? So if you know that, you can do ping pong all day long. Where will this form? Where
Yeah.
will this form? Once a major high or low has been taken out. Okay,
Yes.
once
Yes.
a major high or low has been taken out. Now right here we have these highs. We have these highs. Okay, we have these
Yes.
highs, and then you see price just wicked it. Is it? Oh, wicked it.
Yes.
Okay, and then now do they have any reason to keep going higher? No. So now the thing is the order block was not clear, right? The POI was not clear. Where did this mitigate into? It was not clear. Okay. So
Yes.
what we do is as soon as this high has been taken out, I go to 1 minute and then I'll sell it from there. I'll wait for breakout structure and I'll sell. That's what I would do. Okay.
So like
And then
you will not wait for it to return to the POI in the 1 minute.
no, I'll tell you how to trade before a breakout structure. That's a
Okay.
very advanced concept. Okay. I'll tell you how to trade without a breakout structure. Okay.
Okay. Yeah.
Based on based on one single candle. Okay, based on one single candle. That's how we do it. Okay, so now you see price went back up, took up both of these highs, and then boom, came back down. And then now we did not refine this POI, right? So let's refine it. Let's now refine it. See, even for refinement, I go to 4 hour. I don't go for lower time. Okay.
Yeah.
now even though this was a stop hunt on a lower time frame, on the 15-minute, this was a stop hunt. I showed that, you know. But
Yes.
you see on the higher time frame, that's why I told you be a dynamic trader. Always switch time frames. On the 4 hour, this would be seen as equal highs, right?
Yes.
This would be seen as equal highs. Okay. Okay. Now that's not the thing. We need to refine it. Okay. Now, how will you refine it? I told you about the wicks. Boom.
Yes.
That's it. That's it. That's refined. Okay.
Yeah, but
Yeah.
we look at the POI which is the closest, right?
Yeah. I'll tell you. I'll tell you. I'll tell you. Okay. Don't worry.
Okay.
I'll tell you.
Yeah.
Now, let's go back down to a 50-minute. Once we go back down to the 15-minute, okay, This is what price did. Okay. Now price went back higher, came back down lower. Okay. And then
Okay.
once
Yeah.
again it went back higher. Okay. It
Yes.
went back higher, and this was inside of the 4-hour the
POI.
unrefined POI. Okay.
Yes.
Now if this high was to trust, okay, if this high was to trust, it should have done this. It has to
Yes.
break
It should
this
have
trust.
broken them. Yes.
Yeah, but did it break? No.
No.
Did it break? No. So now on the 15-minute, we have this range right here. You see how price is fractal, and this is how we use the fractal nature of the market. Okay. From
Yes.
this low to this high, we have a new range. So now
Yes.
price would come back inside of a discounted price. Now we know anything below this would be a discount price.
Yes.
Okay. And then you see it came back down. Now where is the external range liquidity? Right
Above
here.
this high. Yes.
Okay, above this, which means now the people who trade with the trend, they will place their buy stop above this. Okay,
Yes.
they place their buy stop above this. So now you see what the market did, what the banks or anyone who controls the market, this is what they did. Okay,
Yes.
they took out that high and then boom, came back down. Because why? Buy stops were resting, and if they keep
Yes.
continuing, yeah, if they continue going higher, okay, the people who placed buy stops here would be in profit. So do they
Yes.
want us to make profit? No, obviously no. So they pulled back down. They pulled back down, and then and now you see this. You see these highs right here. Now on a lower
Yes.
time frame, this would be viewed as a resistance, right? Because
Yes.
this is 1, 2, 3, 4, 5. This is six 15-minute candles.
Yeah. One and a
Okay.
half hour. Yes.
Yeah, 1.5 hour, which means now, so NZ would have taught you this. BFIs are stacking orders.
Yes.
Because why? There's a lot of highs in the same place. And even the
Yes.
support and resistance traders, they wouldn't just do a line like this. They would mark this whole area as a resistance, right?
Yes.
Now, what makes this POI high probable? What makes it high probable? The inducement below this. You see that? The inducement.
Yes.
The inducement is what makes it high probable. And the next thing we know is that price has no reason to go above this, because on the 4-hour time frame, this was just pure, like it was just a huge imbalance, right? There's nothing
Yes.
clear on the 4-hour. So now we know price has no reason to go above this, right? Price has no reason to go above this on the 4-hour.
Could
So you
this?
may you see all of these weeks, but we
Yes.
need to know about the higher time frame, because on the 4-hour it was
Yes.
just nothing. So why would
Yes.
price react off here? Why would it react
Yes.
off here? There's nothing, right?
Yes.
Yeah, they'll always do something very logical. Okay, very logical. So now if you go to the 15-minute, I hope that made sense.
Yes.
Okay, now what makes this POI high probable is the inducement. You see that? This is
Yes.
the inducement. Okay, now this was a low, this was a high. Okay, and then you see what happened? Price went
Yes.
higher, took out all of this liquidity, and then mitigated right into that order block, the final order block where price could go into. Okay, and we had the
Yes.
inducement right here, and then price broke minus structure right here. Okay, broke that structure,
Yes.
broke minus structure, and then it broke even this low right here. Okay, which
Yes.
means now we have the bearish intent. Now we know that price has switched into a bearish market. Okay,
Yes.
and then what did I tell you? What did I tell you earlier? I told you, if price breaks structure and if it retraces and if it breaks structure once again, okay,
Yes.
now the breakout traders would view this high as a strong high. Okay,
Yes.
so I told you,
Yes.
I told. Now you see, price is very fractal. Okay, now imagine none of that happened on the right side. We have a new range, so we broke structure. I told you, once a break of structure happens, we have a new range. So now the new range would be from this high, okay, from this high
Yes.
to this low, okay, and then I told you, within every range there will be a trap. Okay, so the first thing we would do is we would mark for discount and premium prices. All right, now we know anything above this would be a premium price. Okay, and
Yes.
then and now the next thing is, I told you, within every range, within every new range there will be a trap. So now, like I told you, they do not want us to make money. The same things come once again. And then if they don't want us to do that, would they give it that easily? Now you
Definitely
see
no.
that?
Yes.
Definitely no, right? Now imagine how
Yes.
many people now, even though it got induced right here, it got induced. You see, we have a
Yes.
lot of stack ties right here. Okay,
Yes.
it got induced. But why didn't it work out? Because this was a very clear order block. Okay, many people would have viewed this, right? Many
Yes.
people would have viewed this because you just see how clear it is. See how
Yes.
clear it is. Okay, many people would have seen this as a good order block. Okay, so now based on the information I gave you earlier, you know that this order block will not work out even though it has an inducement.
Yes.
Okay, even though it has an inducement, it will not work out because why? Many people would have viewed this, right? Many people.
Yes.
Now we have identified our trap, right? We have identified the main trap within the range. Okay, we have identified the
Yes.
main trap within the range. Now, and then unfortunately I can't go back down to the 1 minute time frame. Okay, I'll just explain what happened. Now, this was now we're in the 15-minute time frame from this high to this low. Okay, now imagine what would have happened on the 1 minute. I should have come back down like this, right?
Yes.
This, okay, and then we have a inducement right here. We have the inducement right here. Okay, so I told you, always choose the order block that's closest to the inducement. Okay, and then on the 1 minute, okay, on the 1 minute, there was an order block. I took this L, okay, there was an order block right here. Okay, this order block was the reason for this break of structure. You see, now on the 1 minute, this would have happened, right? Now you will hesitate right now. Which one would be my right order block on the 1 minute? Is it this? Is it this? Or is it this? Okay, you would have
Yes.
hesitated, right? And
Yes.
now we even have a inducement right here. Okay, we even
Yes.
have a inducement right here. And then on the 1 minute, you can see now you see this major break of structure. Okay, that's a major break of structure. Okay, this is what would have happened on the 1 minute time frame, right? I'm talking
Yes.
about this price action on the 1 minute. And then I told you this was the major break of structure. This, this.
Yes.
Okay, okay.
Yes. Okay.
And then you see how price, the real, the real bearish momentum came in after this push higher. You see that?
Yes.
Because this was the order block that broke major structure. Major structure. You see that?
Yes.
This was the order. I'm sorry, I can't go back down to 1 minute because it's not the premium. Okay. So now price went higher and then broke this major structure. This. Okay. So now which one would we choose? Now we know this is where the real moment where the bear stepped into the market. Okay.
Okay.
And then that POI was right here. And now we know that there's a lot of liquidity resting above this. Tons of liquidity resting above this. A pool of
Yes.
liquidity. Okay. And then you see how it came back high? Boom. You see that? All of the liquidity has been taken out from this high. Okay. Yo,
Yes.
can you hear me? Okay.
Yes. Yes.
Okay. And then Now imagine if we were only on the 15-minute time frame, okay? If we were only on the 15-minute time frame, we would have exceeded right here, right?
Yes.
That is the reason I told you we need to always stay on the higher time frame perspective. Okay. Now, if we go to the 4 hour, if we go to the 4 hour, now internal range liquidity has been taken out. So now,
Yes.
where is the external range liquidity?
Below
Right
this
here,
low.
below this.
Yes. Yes.
You see, that's the
Yeah.
1 to 99. See,
Yes.
see the risk to reward ratio?
Oh, yes.
That's the 1 to 99. The crazy, right? That's the 1
Yes.
to 99. Because I exited, I took out my full partials at this low. Okay. Full amount because I know price has to come back down. Because you all even NJet tells that you need to always make the story behind your trade. Okay. Or else you will get lost. NJet
Yes.
tells you that, right? NJet
Yes.
tells you that.
Even the
I got that from
Phantom
NJet.
does that.
Yeah, I got that from NJet. Okay. Then I'm just showing you all the high probable trades. Okay. So once we go back into the lower time frames onto the 1 minute, you know what I mean. Okay.
Yeah.
Now price did this, came back down. Okay. And then I told you about the climax reversal, right? I told you earlier.
Yes.
Now, wouldn't you see this as a climax reversal because it took out liquidity from this high and then boom, it broke structure heavily. It even broke this
Yes.
structure. And then now, does price have any reason to now? Many people would have looked at this, right? But now, does it have any reason to get back into this high? No, right? There's no
No. Yes.
liquidity. There's no
Yes.
liquidity. So which means liquidity is what drives the market. And now there is no liquidity for this high to be mitigated, right?
Yes.
And then, so the price came back up. And then you see, without any reason, it just drops from here. Now why? Why did it like why what was the reason for price to turn from right here? No reason, right?
Yeah.
Nothing clear. And then, so I told you, market structure is very important. So now we have this high, and then this is the low we would take into consideration. Okay, because now you see there was no liquidity, for price to go back into this, which means there is no internal range liquidity. So there needs to be internal range liquidity, right?
Yes.
Now, yeah, okay. Now, what they did with liquidity, okay, because now they have a reason. Now they have a reason to go higher. You see that?
Can you explain it one more
Now,
time?
once all of this, yeah, am I not clear?
Your voice was not audible.
Am I clear now?
Yeah.
Okay,
No, it
now
is
am I
still
clear?
not clear. Yes, it is clear.
Uh, okay, okay. Can you hear me now?
Yes, clearly.
Okay, sure.
Yes. Can you start again with
Yeah.
the climax reversal?
Okay, okay, okay.
Yeah.
Now, I told you about the climax reversal, right? Now you see price has no reason to go back into this high because there is no liquidity.
Yes.
There's no
Yeah.
liquidity. Okay. Now, so if there's no liquidity, they have to create liquidity, right?
Yes.
They have to do an inducement. Okay. So now
Yes.
all of these highs will act as inducement for higher prices. Now they
Yes.
have a reason to go higher. Okay. So now would you trust any of these highs? This order block pointing in this area or this area. Would you trust it? No, right?
No. Right. Yeah.
No. Okay. So then this is how price came back up. And then even though it did not go this higher, okay, it took out that high.
Your
Took
voice
out
is
this high.
still.
You see that?
Your
Give
voice
me
was still, again stucking.
okay, give me a minute.
And I'm not able to hear anything if you are saying something.
Okay, give me a minute now. Okay, can you hear me now?
Yes.
Okay, can you hear me?
Yes.
Okay, so now this is what price did. Okay, from this high, I'm sorry, okay, from this high to this low is a new range. Okay, okay, can you hear me now?
I can hear you. Like on the 15 minutes time frame, that will be our range.
Yeah, yeah, on the 50 minute, I'm talking about 50 minute. Okay,
Okay.
from this high to this low would be a new range. Okay, because
Okay.
why? If we take this low, where is the internal range liquidity? There was no internal range liquidity, right? So they need to
Like,
create an
can
internal
we
range liquidity.
can we
Yeah,
not
what's it?
consider this as an as internal range liquidity, like for this
Which
order
one?
block?
Okay, we can do that. We can do that. But now to fill all of these imbalances, is there any liquidity?
No.
No, right?
Yes.
No,
No.
there is no liquidity. So why would now? Is there any reason to for price to go back higher into this? No, right?
No. No.
There's nothing in this area. You see that? So then,
Yes.
what price did was this? It went back high and then broke structure right here, right
Yes.
here. Okay, it broke structure, and then this was like it came back down. Okay, it came back down right here, but you see this was not even a tick. So even on a 50-second time frame, there would have no candles would have been below this flow, right?
Yes.
Because this was just only a tick. You can see that, and we on the 50-minute time frame. Okay, and then I told you where did the major break of structure happen after this. See,
Yes.
is where the major break of structure happens. So imagine this did not happen. Okay. Now price broke this structure. Price broke structure right here. Okay.
Yes.
And then where did the real momentum come from? Right here. Okay. Right here. And
Yes.
then there is even order flow.
GoLogin is the best browser for multi-accounting. GoLogin is a platform that enables users to manage multiple browser profiles. GoLogin is the best browser for multi-accounting. GoLogin is a platform that enables users to manage multiple browser profiles.